Welcome back to chapter 5. In chapter 4, we discussed about resident juridical person and resident natural person. Now, in chapter 5, we are going to discuss about non-residents. When a non-resident will be subject to corporate tax in UAE and on what basis they will pay taxes and when is their registration deadline and what is their obligation in corporate tax, this is what we are going to discuss. Now, non-resident, same like resident, I am bifurcating into two, which is juridical person and natural person. When it comes to juridical person, when a juridical person will be subject to corporate tax if that person is a non-resident. Non-resident is like someone who is a foreign company. You can make it very simple. It's a foreign company. When a foreign company will be subject to UAE corporate tax, this is what we are going to discuss. There are three situations a juridical person will be subject to corporate tax in UAE. First one, if the foreign company has a permanent establishment in UAE. In short form, we can call it PE. Second one, if a foreign company has a nexus in UAE. Third scenario, if a foreign company has any source income from UAE. These are the three situations where a non-resident, a foreign company will be subject to corporate tax in UAE. Where it is explained in corporate tax law, it is explained in corporate tax law, again article 11. Now, we are going to discuss what is permanent establishment, what is nexus, what is source income. Before that, for resident, any resident person like they are going to pay taxes in UAE on their worldwide income. We discussed this in the previous chapter, where it is explained they are going to pay taxes on worldwide income, article 12 of UAE Corporate Tax Law. In the same article, article 12, it is explained that if a person is a non-resident, they are not going to tax on the worldwide income. Instead, that foreign company will be paying taxes on the income generated from UAE. If a foreign company is generating any income from UAE, UAE will tax only insofar that income is attributable to UAE, not on the worldwide income. When an income which is attributable to UAE will be so means the foreign company, if they have PE or nexus or source income, whatever income they are generating from those PE or nexus or the income from source, that will be subject to UAE corporate tax. Now, what is permanent establishment? Permanent establishment means, in simple form, you can say it's a presence in the country. How a foreign company can have presence in UAE? Either they can have a fixed place in UAE, or they can have people in UAE. In technical term, it's called fixed place PE and agency PE. We will discuss this. If a foreign company, a UK company, has a fixed place in UAE, how they can have a fixed place in UAE? They can have a branch. They can have a office. They can have some mine, oil rig. It can be anything. If a foreign company, a UK company, has a presence in UAE through a fixed place, then it is called permanent establishment. Now, that UK company required to pay taxes in UAE only the income which is generated from the PE, or it can be through people also, agency PE also. Let's say UK company has 10 employees in UAE, and these 10 employees are working for UK company sitting in UAE, and they are generating income. That means the people in UAE is considered as a permanent establishment. Now, in entire this, when this is actually comes to a cross-border transaction issue, that transaction between country to country. When it comes to cross-border transaction, there are always two topics which we can fight from morning to evening, and nobody is going to win. First one is PE. Whether UAE company has, foreign company has PE in UAE or not, or whether UAE company has a PE outside UAE or not. Second thing, transfer pricing. What is transfer pricing? We discussed, I remember it was in third chapter. Transfer pricing means any transaction which is happening between related parties or connected person, it is at market value. So people can fight, yes, it is at market value. The authority can tell, no, it's not at market value. So these two topics, also PE, like companies can tell, yes, my company has a PE in UAE, my company has no PE in UAE, and authority can give a different argument. So these two things are very subjective, and we cannot, like as I told, like if a UK company has 3-4 people in UAE, the UK company can tell it's not a PE. UAE tax authority can tell it's a PE. And in the entire world, there is a lot of cases happening in and around about permanent establishment. And if you see, the country which has the most interesting and most number of PE cases is India. You can check in internet, there are a lot of permanent establishment related cases which happen in India. There was a case of Formula 1. Formula 1 put a track, a racing track in India, and Indian Income Tax Authority told it's a PE. That track is a PE. Second, recently there was a case of a UAE based hotel. This was happened, I believe, in 2025. The UAE, I forgot the name, I think it was Hayat or some group. They like Indian Income Tax Authority told like they have a PE in India because they are consulting other hotel groups, etc., etc. So permanent establishment is a very subjective concept which, like countries and tax authority versus companies are keep fighting. It will never end. Now coming back to our topic, if a foreign company has a permanent establishment in UAE, then in that case, that foreign company need to pay taxes in UAE insofar the income the foreign company generated through this permanent establishment. If they have a permanent establishment, then the next question is like, when they need to register. When they need to register. Once they registered, then the next question is, when they need to file tax return. The same flow which we discussed about resident. Then when they need to deregister. Now, before getting into this, let me give a little more idea about these things. Let's take an example of branch. If a UK company is opening a branch, they may be having a trade license. Just because they have a trade license, does that mean they have a PE in UAE? No. Just because they don't have a trade license, that doesn't mean they don't have a PE. So PE is a concept. We need to realize or analyze that whether a foreign company has a PE in UAE or not. As I told, if a UK company take a branch license in UAE, they have not taken any office, they don't have any employee, they just have a trade license. That trade license itself cannot become a PE in UAE. UK company has a trade license and bank account. Bank account cannot be considered as a PE. Now on the flip side, UK company does not have a trade license, but most of their employees are sitting in UAE and working. That means even though they don't have a trade license in UAE, it can be considered as a PE. When it comes to PE, the safe word you need to always use is may, because we cannot tell will, should, can. It will be always may, because nobody can give guarantee whether it's a PE or not. I've seen like many companies, they have opened representative offices, branches in UAE, and when the corporate tax deadline was kicking, like then many companies misunderstood the law, or they misread the interpretation, and they got into the registration. Now when they registered, when they are filing, they need to pay taxes on the income which is attributable to this PE. They don't have any operation, they don't have any employees, then they don't have any income which is attributable to this UAE branch, then obviously the question is there in why they registered in first place. So a foreign entity need to register in UAE after doing a proper permanent establishment analysis. If they identified that we don't have a PE in UAE, that means they don't require to register in UAE. Now one more thing, when you approach any non-resident thing, see, resident is someone who is registered in UAE, they are doing business in UAE, it can be natural resident, natural or juridical. When it comes to non-resident, we need to always refer a document called DTA. Some places it's called DTAA. What does that mean? Double tax avoidance agreement or double tax agreement, DTA, DTAA. What is DTA? DTA means an agreement signed between two countries. Always refer the DTA, what is written in DTA about permanent establishment. I think it is generally explained in Article 5 or 6 in DTA. Always there will be a clause about permanent establishment. When a foreign company can consider as a permanent establishment in another country, this is always explained. Now, before making a judgment that okay, they have the foreign company is doing some construction in UAE, before making a judgment, yeah, they are doing a construction, it's a PE, or they are providing any long-term services in UAE, it's a PE, always go back to the DTA and read what is written in the DTA about the PE concept. And maybe they will tell, even if a UK company is doing some activity through a fixed place, but that activity is for a short term, let's say for 3 months, then it is not considered as a PE. I'm just giving a hypothetical example to you. Whereas if we make an interpretation that the foreign company is conducting a business activity in UAE through a fixed place, and then they are a PE, they need to register, that will more likely go wrong. So always refer DTAA to understand whether the foreign company has a PE or not. If they have a PE, the foreign company have a PE, then that means they need to register for corporate tax. When they need to register for corporate tax, they need to register for corporate tax within 6 months of PE established. Now, the authority doesn't know when you got established your PE. As I told, just because you have a trade license, you should not consider 6 months from the date of trade license. Because you don't have a trade license, you should not say like I don't have a trade license. Always understand on which day you established your PE in UAE, and from that day, within 3 months or within 6 months, the foreign PE required to register for corporate tax. And once they registered for corporate tax, then they need to file the annual tax return. And once the PE is, there is no more PE, they example, they had 3-4 employees, Now those employees moved from UAE to outside. Now then there is no PE. That means then they can deregister. Then deregistration is also within 3 months from no PE. From no PE. So a foreign company required to register, the first scenario, the foreign company has a PE in UAE. All these things about permanent establishment in UAE is explained in Article 14 of Corporate Tax Law. If you remember in the previous chapter, we told we are going to discuss Article 11 to Article 15. So Article 14 is talking about permanent establishment. Following to that, Article 15 is explaining about investment manager exemption. Now think of a situation, a foreign company want to invest in shares or bonds or like something in UAE, and they found out a investment manager in UAE to handle their investment. It's a third party, and the investment manager or investment management company, it is their ordinary business that they are doing this for others also, investment management. Also, investment manager is getting paid for the service, because they are managing the portfolio at market value. Now the question is this investment manager can be considered as a PE for the foreign company? If the investment manager become a PE, what is going to happen? The foreign company required to register in UAE. So here Article 15 explained that if a foreign company has some investment in UAE and it is managed by an independent investment manager, and that investment manager is getting paid at market value, and that the activity what the manager is doing is in the ordinary course of business of that particular person, then it is not a PE. Just because someone is managing a foreign company's investment and these conditions are satisfied, then it is not a PE. This is what explained in Article 15 of the UAE Corporate Tax Law. Now moving into the second category of a situation where a foreign company need to register. First we told PE, second we told nexus. What is nexus? In corporate tax law, it's just told if a foreign company has a nexus in UAE, then the income generated from that nexus will be subject to corporate tax. This is what explained in tax law. Now what is nexus? These things explained in cabinet decision number 56 of 2023. The literal meaning of nexus, you can say like connection. What is the foreign company's connection in UAE? What is the foreign company's nexus in UAE? It can be anything. It was so much of confusing when the tax law came, what they mean by nexus. Then later a cabinet decision got published, 56 of 2023, and it clearly explained that nexus means immovable properties. Immovable properties. Example, if a UK company has a real estate in UAE which is owned by a UK company, this real estate property can be considered as a nexus. So if a foreign company has any immovable property in UAE, it's not only always real estate, it can be any immovable property. Then that foreign company is considered having a nexus in UAE. Foreign company is considered having a nexus in UAE. If they have a nexus, then they need to pay the taxes on the income generated from nexus. Now this cabinet decision number 56 of 2023 gave a blanket rule that if a foreign entity has a immovable property in UAE, then that immovable property will be subject to corporate tax. That means that foreign company has a nexus in UAE. Further, in 2025, there is a new cabinet decision issued, which is cabinet decision number 35 of 2025, which further explained that if a foreign company has some investment in UAE and that investment they have made through some qualifying investment fund or real estate investment trust, then subject to certain conditions they can avoid this nexus. We will discuss that in later stage. It is a bit complicated. There are certain percentages, all these things are there. For your current understanding, it is good enough to understand that if a foreign company has a immobile property in UAE, that means that foreign company has a nexus in UAE. And if they have a nexus in UAE, the income generated from that nexus will be subject to corporate tax. If they have a nexus, then the next question is when they need to register. They need to register within 3 months from the day nexus is there. Then they need to file. When they need to file? Same, within 9 months from the end of tax year. Once the nexus is not there, then they need to deregister also. Again, when they need to deregister? Within 3 months. So this is about nexus. In short, a foreign company has a real estate or immobile property in UAE. If yes, it is considered as a nexus. From the day they have nexus, they need to register and file the annual tax return, and when the nexus is not there, within 3 months they need to deregister also. Now the last category is source income. If a foreign company has a PE or nexus, then they need to register. What if a foreign company is earning some income from UAE and they don't have PE, or they neither have PE nor have a nexus? What could be the situation? I'll give you certain source income. Example, service provided, interest earned, IP income. Now, if a foreign company, let's say a US company, this US company is providing some services to a UAE company, one Indian company, and this company has a fixed deposit in UAE bank, and one Canadian company, they are getting some royalty from their intellectual property. They have some trademark or patent, and that they have given to a UAE company, and they are getting royalty from these things. What will happen in this situation? Is it a PE? No. US company provided services to UAE company. If they have provided this service through, like, a PE, means through a branch or through an office or through a agency, then that can be a PE. If it is a PE, then they need to register, file, everything will come in picture. If Indian company has a fixed deposit in UAE, from where the income is generated, the interest income is generated from UAE only. But does that mean the Indian company has a PE in UAE? No. Is it a nexus? No. Then what will happen? Then it is considered as a source income. Same way, IP income. They gave a trademark or a patent to a UAE company, Canada company, and UAE company is paying royalty out of it for the IP which is getting used. Now, from where Canada company is getting this income? This income is sourced from UAE. Does the Canada company require to register here? No, there is no. If there is no PE, no nexus, then no need to register. But it is still a UAE source income. So if there is a UAE source income, it is explained in Article 13 that if there is a source income from UAE, then that means it is subject to withholding tax. Withholding tax means when a UAE company paying for this particular services, let's say we told like US company provided some services to UAE company. When UAE company paying the service charges, they are going to deduct certain amount, and balance they are going to pay to US. Now this is called withholding tax. Tax deducting at the source and balance will be paid. That means then they are telling, okay, we have taken our part of taxes, now you can take the money, you don't need to register here because you are a foreign company. Like UAE cannot ask every foreign company to come and register here, but at the same time, it is very important to have a withholding tax. Otherwise, what is going to happen? There is a huge chance that the companies in UAE, they are going to take services from outside UAE. When there is a withholding tax, the companies will think that, okay, if we are taking this outside UAE, then we need to deduct the withholding tax and pay. If it is within the country, then there is no withholding tax. Withholding tax is coming under the concept of cross-border transaction. Withholding tax is explained in corporate tax law, Article 45. Article 45 has explained about withholding tax. Currently, withholding tax is at 0%. Now the difference is that why they told 0% when there is no withholding tax. It's not that there is no withholding tax. They told withholding tax is applicable in UAE, but currently the rate is 0%. So there is a higher possibility that in future authority will come and tell this is the withholding tax rate. Example, let's say 5% or 7, it can be any percentage. So right now it is at 0%. In short, we are discussing about foreign company. Foreign company, they are taxed in UAE in 3 situations. Situation number 1, if they have a PE. If they have a PE, it can be branch, it can be office, it can be anything like which is considered as a PE. If yes, that means they need to register here. Always refer the DTAA, and based on the DTAA, we need to make a determination. If there is a PE, they need to register, they need to file the tax return, and once the PE is not there, they need to deregister also. Nexus we discussed that there are 2 cabinet decisions. Cabinet decision number 56 of 2023 and 35 of 2025. Like we discussed that if a foreign company has a real estate investment or an immovable property investment in UAE, then that is considered as a nexus in UAE. And if they have a nexus, within 3 months they need to register and file the tax return, and once they don't have a nexus, they need to deregister also. If a foreign company is getting any other income from UAE source, neither through PE nor through nexus, then it is considered as UAE source income, and UAE source income currently subject to withholding tax, and the withholding tax rate right now it is 0%. This is about the whole thing. Now we discussed about resident, we discussed about non-resident. Certain like benefits about taxes which is applicable for both resident and non-resident. Certain things are exclusively for resident. Now if I am telling 375,000 dirhams is 0 tax. For a non-resident also it is up to 375,000 dirham, it is 0% tax. So this threshold is available for both resident and non-resident. We discussed about free zone. We discussed about qualifying free zone person. That means a free zone company subject to conditions, they will be eligible for 0% corporate tax. This benefit is available for resident free zone company also. A foreign company who has a PE or like a branch of a foreign company also can get a qualifying free zone benefit. So like this, certain benefits are available for resident also, non-resident also. But certain benefits which are exclusively available for residents only, not available for non-residents at all. What are all those benefits which are available for residents? Number 1, small business relief. Small business relief is available only for residents. This resident can be juridical also, natural also. So, if an individual natural person who is conducting business and getting more than 1 million got registered, if that person is getting revenue in a year below 3 million dirhams, and regardless that person is a natural person or juridical person, as long as the person is a resident, then that person can get small business relief. Second one, tax group, which we are yet to discuss. Tax group means two or more companies can create a group, and after creating the group, they are going to have one tax registration number and one tax filing. So, this tax group, why people should do, is it good to do, what are all the conditions, when it is recommended, we will discuss when the tax group things comes. But for the time being, tax group can be made only by residents. A foreign company's branch cannot make a tax group. Third thing, qualifying group relief. Qualifying group relief, again, this all will come in the subsequent chapters. Qualifying group relief means two companies can transfer the assets or liabilities between the companies. There are conditions. There should be 75% ownership and all. There are conditions for that. If the conditions are satisfied, company A can transfer the assets to company B without gain or loss. Whatever at the cost, they can transfer. So, that means there will be no profit generated in this transaction, and there will be no tax applicability on these transactions. This qualifying group relief is available only for a resident person. Fourth one is loss transfer. In UAE Corporate Tax law, a company who made a loss can transfer their loss to another company who made a profit. Again, there are conditions for this. We will discuss, like there are 3 articles which is exclusively talking about losses and loss transfer and loss carry forward. But for the time being, it is loss can be transferred between companies. If company A made 1 million loss and company B made 2 million profit, company B can take this loss from company A and reduce the profit and pay the taxes on the difference. This loss transfer is available only for resident persons, not for the non-resident person. Now, it's a matter of subjective question. Example, this is especially for those who are into consultancy. Your client is coming and asking, I'm a foreign company and I'm thinking of setting up something in UAE. Should I set up a branch or a subsidiary? See, there are positive side also, negative side also for everything. Now, I always analyze these things, that when it comes what is the actual requirement, whether they should go for a standalone company or a subsidiary or a branch. And one of the things what I consider is on the corporate tax benefits. If they become a subsidiary, they can be getting certain benefits, like as I told, small business relief. Small business relief cannot be availed if someone who is setting up a company in UAE as a branch. So, it is highly subjective. Now, last 2 chapters what we have discussed is on the taxable person. We discussed about resident and juridical natural person. We discussed about the same way for the non-resident as well. Now, we have discussed about taxable person. Now, then next what we are going to discuss, which I will consider it as a bit of boring chapters, which is exempt person. Why it is a bit boring, that also I will tell to you. Exempt person is not something on a day-to-day thing which we will see. Once in a blue moon we will get to deal with some exempt person. Not to everyone, I am just telling my personal opinion. There are qualifying investment fund, qualifying charitable trust, all these things. On a day-to-day basis, what we are dealing is taxable persons, those who are subject to tax and they are paying taxes on the different rates. But yes, we will touch upon exempt person also in next chapter, and see you in next chapter. Till then, bye bye.